Good morning, says Mr. Sumanth Kumar. Good morning, Mr. Kumar. I'm sorry to keep you waiting. I I just got engaged in a LinkedIn debate on comments. Oh man, sorry about that. Let me just put myself live on. I just forgot I had gone live on YouTube already. How you doing? I'm sorry to have kept you waiting. Just 1 second. Let me just go live on YouTube. Oh, sorry, LinkedIn. Done. Hope you got well, by the way. All good, thank you, says Mr. Suman Kumar. I am well. It's just that my throat isn't getting fixed. There is some problem in the air, I think, which is delaying the recovery of my speech, as you can probably see, which is a very big problem, right? Which is a huge concern. Done. Live on YouTube, live on LinkedIn. So I'll tell you what I was discussing right now, Mr. Sumant Kumar. So Mr. Shantanu Deshpande, who's the founder of Bombay Shaving Company, he wrote this article, okay? I'll tell you. Poor noise. The term is now catching on and it is brutally insulting. Heard this from many founders and investors of IPO'd or soon to IPO companies. Dismissive and sadly with good reason. There is now a fast expanding, very vocal voice on the internet. Founders are quitting before IPO, 235 PE, stealing from retail investors. Founders are selling, so much loss, etc. Long posts, passionate videos, tons of drama. This voice seems to believe that they are protecting the retail investor, saviors of the Indian middle class, the brave raising the voice against the rich and conscienceless thugs who run companies going public. Every like and well said, feeding an ego hungry for attention and validation, believing that their opinion will dent the price they so strongly believe is undeserved. And there is some modicum of truth to what they say also. The self-importance and hypocrisy of zero skin in the game aside, it's good to hold India Inc. accountable. We all lose if public markets lose faith. But tragically, what they don't realize is that they're totally irrelevant. This isn't a government or political party where revolution depends on volume of people. These are financial markets where literally 100 odd people, mostly in Mumbai and Surat, decide if a price is fair, bases their deep analysis and experience. And it is, they set the price, and if it is, they set the price and buy. And then people like you and me can buy or sell basis that price. And if we hold increasingly large amounts, we influence price more, not rocket science. The 100 don't care about engagement hungry commentators at all. It is very likely they don't even know they exist. They just put their money where their mouth is. Unlike poor noise, no money, only mouth. This is what Mr. Shantanu Deshpande wrote. Okay? So I said, so poorly said, it's almost unbelievable. And he said, this isn't an opinion. To which I said, it definitely is, and it is wrong at every level. He said, which part? That it offends you makes it true or rare. I don't know if that's a word. I've used words like tragically and brutally insulting. So it's not like I'm a fan of the system, but it is what it is. I'm not offended at all. What makes you think I would be offended? I'm only embarrassed at this reading of the situation. For the part here it is. You believe the activists, let's call them that, are right and righteous. And while their arguments might be true, they don't matter because 100 traders in Surat and Mumbai that determine the price and they don't listen to the larger retail investor sentiment. That's the analysis you'd like to defend. That's the hill he wants to die on. It's very funny. It's just hilariously out of depth. It's unbelievable, actually. It's pretty fairly unbelievable. And oh man, come on, come on. It's just unbelievable. What do I say? So what he's saying is that you shouldn't speak about, let's say, if Lenskart got valued at $10 billion, it was supposed to be looking at an IPO valuation of $10 billion. Don't look at that valuation, okay? Don't talk about it because you don't matter. At the end of the day, 10 people, 100 traders, he says, they determine the price in your Surat and Mathura. I'm sorry, Mumbai, and they don't listen to you. They don't care if you exist, right? So when OYO was trying to IPO, right, at the first $12 billion valuation, none of the chit chat mattered. None of the signals from the market mattered. It just delayed it because the 100 people said it didn't matter, right? It's not good. Then when it came down to 9 billion, 6 billion, 7 billion, and so on and so forth, it didn't matter what the people were saying. It's just that, when Paytm was going public at a very high price, right? And people were saying that it's overvalued and so on and so forth. They didn't matter. 100 people did. And they don't care if they exist, right? So that's his reading of the situation. Can you believe this? And then when Paytm's market cap crashed from 20 billion to $5 billion, right? How much is that, folks? It's a 75% crash in market value. It doesn't matter because people who are talking don't matter, right? It's the 100 traders in Mumbai and Surat. They matter. Oh my God. Oh my God. This is some morning comedy. I woke up and I saw this. I like, this is fun. This is fun. My God. That is so, so funny. I don't want to say anything, unnecessarily acerbic because we talk, Mr. Shantanu Deshpande and I, occasionally, we exchange some messages here and there on LinkedIn. But man, this is. How can somebody say something like that is my concern. I mean, how can you say something like this with a straight face, with all seriousness? How can you believe that you're sharing an insight while saying something as, ludicrous as this? It's just, first of all, you agree that these people might have some merit, right, when they are writing. You just don't want them to write or share or, their thoughts because you believe they don't matter. The real estate, this is classic dumb money, philosophy that retail investors are dumb and they better not speak. They don't have money, so they don't have voice, and that is it. So that's what this particular perspective is. It's pretty weird. Oh man. Anyway, so let's begin the show, folks. The show that we deserve. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, you got to follow tradition, right? You know the tradition? You know the sweet and sacred tradition of the simultaneous sip, right? We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Beautiful. Sublime. Let's do it again. Oh my God. Lovely. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. It's such a beautiful thing to say. With that out of the way, let's begin. So, dollar touched. Somebody commented, CSP World. Hey man, long time. I do not recognize your handle, CSP World. So, can you please reveal your name? Did you go through the Indigo fiasco? What Indigo fiasco? I didn't read any Indigo fiasco. Oh, yeah, I did. I did. You mean the pilot rest guidelines? We're going to talk about that. So, Chandrasekhar, this side dude. All right. Hi, Mr. Chandrasekhar. So, let's go. 90 rupees per dollar. Rupee is basically getting devalued, depreciating pretty seriously, pretty quickly. Let's talk about the effects of that. Let's have a little quiz. I'll ask you questions and you tell me how rupees fall to this level will affect things. Okay? So let's say electronics. What do you think rupees fall will do to the price of electronics? Go. Quickly, quickly. Electronics. Let me take a sip till then. Go up, right? Because of, uh, you know, great import costs and great import components. Electronics, white goods, same. What do you think is going to happen to pharma companies or IT companies? Go, quickly. IT companies, pharma companies. What do you think is going to happen? They will love it, says Mr. Chandrasekhar, of course. What do you think is going to happen to the agriculture companies? The agri companies and the nation, the agri sector, essentially. What do you think will happen to the agri sector of India when the dollar goes up and the rupee goes down? Agri sector goes down. Exporters do mauj masti, importers cry. Conducive for exports. So here's the thing: the agri sector, it depends a lot on the subsidies for fertilizers and so on and so forth, right? So overall, agri sector definitely gets hurt by a lot because the fertilizer subsidy essentially becomes more and more heavy, and it becomes difficult to deal with. That is what happens to the agri sector. We all know what happens to the exchequer, right? The import becomes expensive. Uh, uh, oil becomes expensive. The oil marketing companies' margins get squeezed, right? The retail oil doesn't get affected directly, but the price of it. But the retail marketing companies, the OMCs, essentially get squeezed, and so on and so forth. Now the question is, why is India letting this happen? Why is RBI, the chief of CEA guy, says not losing any sleep over the decline, right? Why is this being allowed by the Indian government? Why are they letting rupee slip to 90 bucks a dollar? This is because the inflation numbers in the country are pretty low. The inflation numbers right now are pretty much in the control zone. And as they say in control zone, right, it basically becomes very immaterial for the country to bother about rising import costs, right? Because even if those costs are essentially translated to the final market, the inflation number grows, but not as much to actually hurt the economy. So that's why the government is like playing sport, right? Because the devaluation of currency will actually help the import guys navigate through the tariff impact as till the time the deal is signed. So it's a strategic maneuver essentially. So till the time you have a deal, right, you have a lot of tariffs, and because of those tariffs, your products become uncompetitive in the global market. Now, because they become uncompetitive in the global market, you need to fight back in some way, right? So, what can you do, right? Devaluation of currency is one of the ways to help the export markets, because the real RERE, the real exchange rate of the dollar is something around 97 bucks. So there is a lot of good news. This is a lot of good news for exporters of Indian products overseas, right? Especially to US. So this is one of the ways India is trying to essentially fight it. So till the time deal is there, it might not be looking at stabilizing the whole operation. So now, while wild swings do not sit well, right? The volatility is a very big problem. The entire depreciation spiel doesn't hurt as much till the inflation numbers are all right? How's that? So that is pretty interesting, but it definitely affects the uh, IT guys and so on and so forth, because they participate in some sort of hedges when it comes to their trade, right? Because they're exporting so much and they're getting dollars, right? So they book forwards uh, to essentially hedge the currency risk. And if the dollar goes up, right? If the rupee goes up, their hedges make mark to market losses. Those are called M2M losses. Now, when they make M2M losses, it does not sit well for their accounting books, right? It becomes a bit of an issue. But why, as that money comes in, as that account receivable converts, right, the books are green. Now, if that forward is traded in a different way, if it's hedged, right, it becomes a bit of a complication when it comes to the whole thing. The importers, on the other hand, they just lose. So it becomes very difficult for them. So if you want to read the exact case which these people have highlighted, it's pretty interesting, very interesting, and also slightly complicated. So Rupee slide spurs India Inc. to tweak the foreign exchange hedge playbook. This is the hedge playbook, of course. Mark to mark losses up, pressures on exporters. So he says, many companies in IT and ITES pharma turnkey project business review policies. They have long-term foreign currency receivables, and because of USD's continued rise, they have mark-to-mark losses. Most follow a laddering type of policy where they have hedge a certain percentage for the first 6 months and then another percentage for the next 6 months, and sometimes a different percentage for 12 to 24 months. So this is basically splitting the hedge, making it slightly short term. So the example is, consider an IT company with a monthly inflow of $5 million. That's $60 million a year. Okay. 2-year contract, 120 million. At any point, the outstanding receivable would be around $10 million. Okay. At any point, the outstanding receivable, the amount of money which is supposed to come, will be 10 million. It had booked a forward of 60 million, expected a cash flow of 1 year at 87 rupees a dollar. Okay. Suppose the rupee touches 91. For Q3, it would have notional gain of 4 rupees on 10 million receivable and notional loss on 4 million on 60 million. So there's the notional gain when it comes to the receivable and notional loss when it comes to the hedge, right? Its net MTM loss for would be 20 crores, and that is a problem. So that's why they look at changing the hedging strategy and making it slightly laddered, right? So that is a pretty interesting way to deal with the whole situation. But that is what we are looking at when it comes to the currency play, right? Very interesting. Very, very interesting. Speaking of what is interesting, folks, we forgot to share the Dr. Michael Burry's analysis on Palantir. So he had that interview with Michael Lewis, right? Mr. Michael Lewis. And I explained how that particular, thing is very interesting. His interview with Michael Lewis, and I'm going to watch that. So I did. And Mr. Michael Lewis asked him why he was short on Palantir. Why do you think he knows something that the market doesn't know right now? And you know what he said? He said that Palantir has the billionaire to revenue ratio of more than 1. Billionaire to revenue ratio of more than 1. So it has a revenue of $4 billion right? And billionaires, there are 5 billionaires, and he's like that. That's weird. That's weird. So that's something that ticked him off, and then he started reading about the company, and he found out that most of the uh, it is basically a consulting kind of a play where they are expensive consultants who are selling to the government and so on and so forth. And these consultants and these people, all the expenditures that Palantir is making on the personnels, they are happening at a at an ESOP level. Okay, so these people are paying these guys at ESOPs, right? ESOPs are non-cash expenses. They're accounting it as non-cash expenses, and when they end up buying those ESOPs back, right, they are left with nothing. That's what he says. He says basically they're not following the gap accounting. They're making ESOP payments as non-cash expense and showing it, but when they buy those back, right, they are basically left with nothing, and the street doesn't realize it. And he says over the next 2 years, Palantir is gonna go way, way down. Right? He says IBM is in a similar business. It actually is growing, it's pretty nice, but it doesn't do any of that, and that basically makes it better than Palantir. How do you think about that analysis, folks? It's pretty amazing. Good interview. The lot to learn from Dr. Michael Burry. Extremely interesting person. That said, let's move on, folks. Let's move on from Dr. Michael Burry's argument, right? Always very interesting. Nobody. So there was this interview which also happened with Mr. Ruchir Sharma. As you know, Mr. Sharma is probably managing wealth for Rothschilds at the moment, right? And he used to be head of a very big bank. Maybe it was Morgan Stanley, right? He was the macro investor or something of that sort. He is a pretty popular writer as well. He's written a book called Democracy on the Road, and then now he's written a book called How the Capitalism Has Failed Us, something of that sort, right? So he's a very popular figure. Now he says that there is to be an AI bubble, and how it's gonna play out is if there is an increase in rates, increase in Fed rates, that's when the AI bubble is gonna pop, because that's how all bubbles are gonna pop. And the person asked him that why would Fed increase rates? He said because inflation is going up, right? If inflation goes up a lot, Fed will have to increase the rate. And if it does, there's going to be quantitative tightening. And when that happens, it's going to be a bit difficult situation. So that's what he said, but I never found him especially insightful. However, it was a pretty decent, decent analysis of the whole situation. Not bad at all. So that was that. Let's move on, folks. Pilot rest guidelines give Indigo flyers nightmares. So we've talked about how airlines are a very difficult business, right? Airlines are highly regulated, extremely competitive, and so on. So now the pilot rest guidelines, which are coming from November 1st, that these particular guidelines, which are basically for airline safety and so on, they're coming in the way of Indigo's punctuality promise, right? Because Indigo runs on a pretty tight schedule, and that's probably interfering with the whole pilot rest program, which is more liberal when it comes to pilot rest, right? A lot of delays, a lot of cancellations, and so on and so forth are happening as Indigo tries to adjust to the new reality, right? Airline facing several flight cancellations and delays, showing its unpreparedness during peak travel season. Now, this is a very important season, of course. December begins, a lot of holiday travel to commence, right? This is the peak season for all travel whatsoever. So this is going to be difficult. So Indigo made a pretty big loss in the last quarter. As I've said, if you want to be a millionaire, start as a billionaire and then start an airline. Even Indigo, which is the most successful airline, perhaps globally, right? When it comes to cash conservation, capital efficiency, punctuality, operational expertise, so on and so forth, it is extremely tight. It's probably, there's Southwest Airlines and then there's Indigo, right? these two airlines globally are the best. Even these people have so much to worry about, right? So if you look at Indigo's last 7 years commercials, financials, right? 7 fiscal years, you're going to see what I'm talking about. Doesn't make a lot of money, right? Uh, you'd consider it, very green, but it's not that green. I mean, it is, but not that green, right? Moving on, folks. A lot of luxury hotels make reservations. Mr. Shantanu Deshpande seems to have replied. He says, "Yep, I didn't say they didn't matter. I said the noise doesn't move anything." That is saying that they didn't matter, right? And it's true. You don't like the argument of framing because everyone knows it's true. Who knows it's true, sir? It's just you. And it'll be true unless noise comes from money. Itme itna so poor, unbelievable wali baat to nahi hai kuch. I'll respond to him in my time. Let's move on, folks. JSW is looking at forming a joint venture, 15,000 crore joint venture with Japan's JFE. JFE Steel, it's going to be a 50-50 joint venture with JSW. So this is a pretty interesting transaction, which you might like. So I'll just tell you the chain of events, okay? JSW had bought Bhushan Power Steel at some 19,000 crores back in 2021. And then it had invested some 3 to 5,000 crores in the company after the investment. So 19,000 crores plus 3 to 5,000 crores, that's 24,000 crores. Okay? 24,000 crores is the cost which JSW had to incur in the whole acquisition. Now what it's trying to do, it's basically selling. So here's the chain of events. BPSL will be first sold by the way of a slump sale as a going concern to JSW Sambalpur. Okay, so JSW Steel will sell BPCL slump sale to JSW Sambalpur for a cash consideration of 24,000 crore. The same amount of money. Okay, JSW Sambalpur is a wholly owned subsidiary, wholly owned unit of JSW Kalinga Steel, which in turn is a wholly owned subsidiary of Piyush Steel Limited. Piyush is an 82.6% owned by JSW Steel itself. So JSW Steel sells to JSW Sambalpur. JSW Sambalpur is owned by JSW Kalinga. JSW Kalinga is owned by Piyush. Piyush is 82% owned by JSW itself. And then after this transaction has happened, right, this particular play, JFE will buy a 50% stake in this particular, entity. And that will be a 15,000 crores. So this will essentially help JSW's net debt pairing by 37,000 crores, and the cash which JSW Steel will get is 32,000 crore. In addition to that, it will transfer about 5,000 crores as debt as a part of the slump sale. So that's how these transactions happen. So if you look at a 24,000 crore company, and if you look at a 15,000 crore joint venture, it essentially means a lot of good financial, engineering and good net debt pairing, right? So that's what's happening with JSW. JSW is on fire, right? In every way possible, as we've discussed. So that's what's going on. Moving on, folks. Very interesting transactions. Flight prices have skyrocketed, by the way. Other airlines are enjoying the fun. Well, there is no fun for the other airlines. If you look at the Indian market, Mr. Chandrasekhar, there is Air India, which is a dumpster fire truck on steroids. It's dealing with its own set of problems, right? Huge problems. Akasa is barely scratching the surface. It's not doing as well. SpiceJet is literally fighting for its life. Go Air is done. Jet is done. Which is left, right? Which airline is left essentially? So there is no fun in the airline business. That's the beauty of the situation. Moving on, folks. The government seems to have backed down from the pre-install of Sanchar Saati app. It says that the app has generated a lot of goodwill already. It has millions of downloads, a lot of fraud detection play, which has already worked out in its favor, and so on and so forth. So that's what's happening with the government. Uh, when it came to Chinese companies and Apple refusing to pre-download Sanchar Sathi, I wondered why the government moved on with that particular play, right? Why couldn't it do it at the retail level, right? Because most apps that get pre-installed in these phones, right, happens at the retail level. So if you go and buy any Android phone, they're going to give you thousands of apps, right, at a software level. They're going to load it and so on and so forth. Why didn't the government choose that route to make it less controversial? Because this becomes very explicit, and even though we all know that it's a nothing burger, right? Privacy is a myth and everything. It still causes a lot of furor. But anyway, the government says it's okay if there is no pre-installation of it. We'll find out ways. We'll get the app to reach the right amount of people, right? What do you think about that? There's a lot of luxury hotels reservations happening in Rajasthan. Uh, Udaipur as a destination is picking up a lot of new hospitality investments in Rajasthan, which is great news. By the speaking of which, real estate in general is seeing a lot of investments, right? So they've figured out that the fit out costs in India are about $75, right? $75 per square feet. And that fit out cost in US or in the developed market, it is at about $150. So India is very efficient when it comes to official real estate, right? And they say it's not just a cost market. It's let's not just call it a cost market, because it is indeed offering a lot of value in different ways possible. Now, when it comes to $75 per square feet, are they accounting for PPP, right? Because in PPP terms, if they're saying $150 in net terms, absolute terms, it really doesn't. It's not cost effective at all, right? If it costs $75 in India and $150 in a developed economy, and despite India having such a big PPP differential, it's not cheap at all. So that's why they're saying it's not cheap. It's basically a value play. But in the absolute terms, at least, they see that the Indian official real estate is pretty value driven, right? So that's what's going on. Let's move forward. India's nuclear power play, having a lot of fun, as you might have imagined, right? India's thorium-based fuel tech push has Anil Kakodkar link. Anil Kakodkar is one of very, very premium scientists, pioneering scientists, right? And he's the mentor of a US-based company, right? US-based company which is called Clean Core Thorium Energy, CCTE, right? Anil Kakodkar, India's nuclear physicist and former chairman of Department of Atomic Energy, is its mentor. So they are basically looking at a lot of, right, the atomic energy bill could be revolutionary for the energy requirements of the country. I'm sorry. So a lot of moves happening. As I had said, one very, very interesting prediction that I had made was that in the beginning, what's going to happen is that we're going to see serious amount of energy, build up, energy capacity build up, because there's a lot of data center, there's a lot of that going on, the whole rise in energy demand going on. But as this energy supply grows up, the whole energy demand coming from AI and so on and so forth, it's going to dip, because the technology itself is going to become more and more efficient. And as it becomes more efficient, there's going to be a dip in the energy requirement. And then there's going to be an energy deflation happening across the world, including India, right? And that's going to be a very interesting situation. That is going to be a very interesting situation. Now, that goes against Mr. Elon Musk's prediction, which says energy is the only currency, right? Because if energy becomes the only currency and if it deflates to that level, it's going to be a bit of an issue. But I see this happening based on some calculations I did. Moving on, folks. India, Russia inking 10 government and 15 business deals. A lot of action happening. Moving on. India's manufacturing also leading to a lot of second order effects, especially in the world of real estate. Real estate developers very happy. Moving on. We talked about airlines. We should have also talked about what Airbus is going through. For a long time, for about 10 years, Boeing was in deep trouble, and all of those troubles were essentially making a lot of problems for people across the board, safety concerns and so on and so forth. Now, Boeing essentially, is soaring again because Airbus has found a hard landing of its engineering troubles. So one Spanish supplier essentially derailed the Airbus train by making out of spec aircraft panels, and that particular thing Airbus is wanting to reverse, right? We talked about how Airbus was dealing with the panels which are somewhere thick, somewhat thin, and so on and so forth. There were electronics which were facing some issues with signals and their transmission of them or receiving of them. So a lot of problems when it comes to Airbus's manufacturing. The chief had said, to be humble, because as Boeing was falling apart, he had said that, there is nothing very static in this business. You've got to be very, very humble. It turns out that his prophecy came out to be true. Airbus is facing some temporary concerns, but overall, I'm all Airbus, no Boeing, and that is what I believe. Let's move on, folks. Moving on. We've talked about the rupee, right? India's trade deficit widened to a record of 41.7 billion in October from 32.2 billion. Services, by the way, services industry has come out with a PMI of 59.2. That is not bad at all. That is great. Although services and manufacturing are both cooling down in November, and they will cool down in December. Can you guess why? Can you guess why they will cool down in December, folks? We've talked about this. Why do you think will services and there's a comment, festive season, correct? Easy. So all the build up that they had done for all these years, for all these months, it was for these 2 months, right? And in January, mid-January, it resumes. So this is a fairly predictable cyclical thing, right? It heats up till October. October is when the festive season essentially begins, right? And then it sort of stays where it stays in November, and in December it declines a little, and from January itself it starts coming back. So that's what's happening. That's what's going to happen, right? Higher pharma and chemical exports to Russia bloc. So Russia bloc is called EU. That is Eurasian bloc. Essentially, it has Russia, Kazakhstan, Kyrgyzstan, and so on and so forth. Some countries, right? India is looking at a trade partnership which is slightly more beneficial. It is looking at $59 billion, the trade deficit reducing of that. So there is a $59 billion trade deficit when it comes to India and Moscow. When it comes to pharma, chemical exports, and so on and so forth, that particular bit could help reduce the deficit. So a few numbers. $68 billion India-Russia bilateral trade relationship in 24-25. They wanted to increase to $100 billion, as you know, from 68 to $100 billion. That's about a 30% jump they want, right? Of this, India's exports were only 4.88 billion. So India doesn't export much, of course, right? So this is what they are looking at. Russia is not such a big economy, if you can guess, right? It's not in PPP terms, I guess it's about $7-8 trillion, right? So it's not a huge economy, and of course these Kazakhstan, Kyrgyzstan, and all of these countries, they are definitely not huge. I'll tell you the names of the countries: Armenia, Belarus, Kazakhstan, Kyrgyzstan, and Russia. This is the whole play. So there is little scope for India to actually, really do some wonders when it comes to this particular block and exports, but the country will try, right? That is very necessary. Speaking of exports and speaking of geopolitical trade and international trade, Mr. Piyush Goyal says, reduce dependence on any single geography for long-term resilience. He says what he's always been saying, that I am, tired of telling it to you that do not depend on a particular country or a particular company for essential supplies when it comes to your business, because trade is getting weaponized as we speak. And trade has a tendency to get weaponized in this day and age. And despite me saying all of this for a very long time, I don't see a sense of urgency for you to actually decouple as soon as possible, which is true, because the China thing, China plus one, was a in spirit operation. It hasn't really turned up, right? And the ECMS thing and so on and so forth, despite all the incentives, most Indian incorporates, they just feel comfortable in going with the status quo, and status quo is very pro-China, and Mr. Goyal has been talking about moving away from it, right? Without naming China, of course. So he says, urgency not visible in industry, assessing the gaps in the supply chains, and calls for quicker action. This is very important, right? Which India Incorporate needs to pick up, but it's not doing that already. I don't know why. Moving on. So, if you remember, the IMF data play, IMF gave C rating to India's GDP data collection and so on and so forth, right? India has responded. India had said that IMF's data rating C is bad because we had not updated the base year for calculation of every data point. The base year is still 2020, 2011, 2012. Now, as it changes to 2022, 2023, and the effects become visible from 2027, that's when the data will be very current. And when it is current, it'll be very collinear with IMF's expectations as far as the quality of data is considered. That's what India has responded with, very interestingly. S&P has upgraded India's insolvency rating, right? Improve creditor friendliness. We've talked about this, so there's no problem. There are raising excise on tobacco, right? Madam Sita Raman is saying that we are not taxing it enough. The levy should not be looked as an additional tax, but it's necessary for the whole state pairing situation. So states and centers divide the earnings, right? And the whole GST rationalization affected that to a degree, and that's what the excise particular play on tobacco will solve for that. So in a way, we are saying cigarettes should not become affordable now because incidence has become lesser, right? Move prevents fall in tax incidence as GST cess ends, calling levy not an additional tax. This is to basically have some sort of rationalization when it comes to state earnings at a net level. So let's move forward, folks. China's service activity slows again, business confidence slips. Now, whenever somebody comes out with a headline like that, people are like flipping out. Whoa, China is crashing, and so on and so forth. But just look at their service activity PMI. It's basically 52.1. So, despite everything, despite all that people are talking about, China's services are still expanding, right? 52.9, 5-month low, weak demand, job losses way, but still, it's not a big issue. A lot of people say Chinese economy is in trouble because of this and that. Their real estate is bust, and so on and so forth. Mr. Ruchir Sharma was saying that, but it is not really hurting things on the ground as much. Mr. Paul Krugman and the like said in 2004 that Chinese economy is a bubble, right? It's been 22 years. And they're still waiting for the bubble to pop, the Nobel laureates. So that's what's going on with China, right? The softer services PMI reinforced the picture of a patchy recovery. Investors now want clearer signs of follow through, either concrete policy delivery, improving consumption data, or more decisive credit support. Credit support is something that China never shies away from. It is very pro credit support. So let's see how China deals with this particular situation. Moving on, folks. Kalshi is a company which has raised a lot of money, right? A $1 billion fundraise. It's valued at $11 billion now. Polymarket and Kalshi, these are the two opinion trading platforms, right? Polymarket is essentially betting on events. So is Kalshi. Kalshi and Polymarket differ on the way they take those particular bets. I guess Polymarket, Kalshi is more towards crypto, right? So they have raised a lot of money and they've made the first youngest female billionaire, right? Whenever somebody comes out with those figures and those laurels, I always get scared, because you know who was the youngest self-made female billionaire, who was popularized, a business icon of course, as the youngest self-made female billionaire. Can you guess, folks? Can you guess what I'm coming at? I'm sure you can. I'm sure you can. The youngest female self-made billionaire. Who was that? And it didn't go very well. It didn't go very well after that. You don't remember? Elizabeth Holmes. Elizabeth Holmes, right? Theranos, $10 billion. Kardashians. No. Elizabeth Holmes, Theranos. $10 billion peak valuation. Forbes 30 under 30, woman leader. But Kalshi is obviously not that. Kalshi is a fairly predictable business, betting on events, makes instant sense. We were, Virtual Voter, my polling company, we were looking at that business, but it is not legal in India, and also we didn't want anything to do with betting in general, right? Moving on, folks. Kalshi becoming an $11 billion company. And Polymarket also raised money. So let me just tell you how much Polymarket is worth. 12 to 15 billion. Yeah, Polymarket is $15 billion and Kalshi is $11 billion. So this is a growing market. Do you know how much money was put in just on Polymarket during the presidential elections, the US presidential elections? Just guess, a random guess on one platform, how many billions of dollars, I'll make it very simple for you, how many billions of dollars were traded on one platform for US presidential elections? Just guess the number, folks. On Polymarket, the total amount of betting for US presidential elections, I'm talking about 2024. Billions of dollars, you gotta guess. Just make a random guess, anything. Come on. Nobody? $3.4 billion. $20 billion, says Mr. Sumanth Kumar. No. $20 billion is too much. $20 billion of bet on just one event would be amazing. But $3.4 billion, that is a lot of money to think about. Your platform getting $3.4 billion, that's over 25,000 crore rupee bets on just one event. Just one event. Then there are many, many other events like that, right? Very, very crazy. Moving on, folks. Corporate India races to close succession gap. Succession is obviously a very big priority. Formal planning jumps 78%, success rate almost doubles to 51%. So if you want to know, I want to read about succession planning in Indian businesses, the biography of Mr. Brijmohan Lal Munjal, written by Sunil Kant Munjal sir. It's a great book, Four Brothers and the Revolution That Shaped India. The biography of Hero, very, very good book. And then there's, of course, Inheritors, right? Which basically talks about succession as a concept, right? Especially when it comes to Indian family businesses. Moving on, folks. FPIs take out more than double of November sales in just 3 days, right? Remain net sellers in 2025 with US trade deals still pending. Debt segment draws lower inflows too. That is obvious when it comes to the currency troubles. This is one of the reasons why the whole play, the trade deal, the currency play needs some sort of stabilization, because India will have a tough time inviting investments if everything just keeps, if the currency for now in this particular year has already gone down by 5.2%. That sort makes the prospects bleak. But you know what's the good side of currency going down? It's the banks, right? I didn't ask you about banking. How do you think banks are going to get affected by the currency drawdown? Take a guess. What do you think it's going to be for banking, the whole decline of Indian currencies? What do you think about that? Banking affected by the currency decline. What do you think? So what happens is, if the currency declines, the whole bond route of fundraising, good for them, says Mr. Sumanth Kumar. Yes, absolutely. Good for them. So when the bond market for the companies goes bad, right, because the currency is depreciating and so on and so forth, it hurts them, right? Banks become greener. They obviously become a better choice when it comes to raising money, right? So it helps the banking. So let's see what happens there, right? For now, PSU banks are slumping, but that's temporary. Moving on, folks. Madam Nita Ambani and Reliance have bought Surrey. It's a cricket team in London. That's where the money going. Cricket teams in London. Moving on. Upgrad's financials came out, folks, at a revenue of 1,500 crores, which just grew 5%. So revenue growth of 5% is basically nothing, right? The losses got halved, but they still were about 200 crore rupees. So 250 crore rupees at a loss of 200 crores, over 200 crores at a 1,500 crore revenue. Not good. Not good, right? That's probably why Upgrad is looking at some sort of inorganic growth to push the numbers. That's why it's looking at Unacademy, Byju's and so on and so forth. 5% net revenue growth at 200 crore loss at a 1,500 crore revenue. This looks pretty tough. Moving on, folks. InMobi is going public. $350 million. It has raised before the IPO. InMobi is, by the way, a very strong company. Very strong company. It runs an ad network like Google Ad Network. right? InMobi's ad network is one of the very, very big part of their story is the glance thing, which is a phone lock kind of an ad play, which you cannot even disable. So it runs in such a good partnership B2B kind of a way that even though it annoys in consumers a lot, right? It doesn't really matter because it's distributed well and it serves as a very, very good tight ad network. So InMobi essentially is a competition for Google ads, right? So that is the market which Mr. Naveen Tiwari has taken on, and very well, and very well. So a very, very strong company. Let's see how much it's valued at and so on and so forth. In days to come, we'll find out. Moving on, folks. Akrit Va Pratu Chaudhary team up for $75 million AI fund called Activate, early stage fund. That is very nice. That is very nice. You know what needs to happen, right? You know what needs to happen. There's some of that money coming here, right? Moving on, folks. NTT Data lines up 2,500 crores, 2,400 crores to expand Bangalore data center campus. Japanese IT firm plans to expand to tier 2 cities like Noida, says Indian MD. Well, didn't you get the memo? Noida is a part of NCR. You cannot call it a tier 2 city. Unless you're actually moving towards Bulandshahr and Jewar and so on and so forth. But for now, 2,500 crores private capex. In India as well, most of the private capex, where it's coming at, is the data center operations. While that creates an illusion of some sort of actual holistic growth, what's better is for that growth to actually be very systemic and very foundational, let's say distributed private capex. That's what we need. But for now, good news, right? Data center campuses opening up, real estate companies making good, and a lot of good things to be happening to the country, right? A lot of good things. Indian market is uniquely positioned despite all the geopolitical troubles that the world is facing, the Russia-Ukraine thing. Russia says that we are willing to meet US as many times as possible, right? We don't mind meeting US time and again, but it's necessary for peace. But for now, there is no agreement. So Russia is just taking the world for a ride. Whatever else is happening in the world is also pretty crazy, right? Afghanistan, Pakistan. India is one place which is showing remarkable growth rate, 8.2%. The growth rate is getting revised from 6.5, 6.8 to 7.2 and 7.3, which is amazing. So let's see what India does, right? For now, the markets are especially good, at least if you discount for the currency troubles, right? The FPI situation. Other than that, a lot of good news for the country. With that, we come to the end of the 185th episode of Thinker's Frequency, folks. Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis, right before we punch in. It's time to punch in, 9:22. I wish you a beautiful day personally and professionally. And I'll see you tomorrow, same place, same time, hopefully. Yeah. Take care. And also, please contribute to the Thinker's Frequency patron program, right? If you want to keep the show running. If we are able to raise as much money to keep the show running, it'll be a signal that the market wants it. If the market doesn't want it, we'll take an exit, right? As we should. Please take care. Have a beautiful day. Bye-bye. I should thank Mr. Sumanth Kumar, Mr. Chandrasekhar, and everybody else who joined. Please take care. Bye-bye.